There's concern that escalating tensions in Egypt could impact oil prices. Let's check in with Sharon Epperson at the NYMEX for more. Hi, Sharon.
Hi, Scott. These are the largest protests that Cairo has seen in decades. I lived in Cairo and worked at the American University in Cairo right near Tahrir Square in 1990, and we would have never seen anything like this at that time. But right now we're looking at this political unrest, opposition over what they're seeing in terms of the political challenges against the president there, and we're continuing to watch what the impact could potentially be for oil prices. Right now we're looking at crude prices that are not affected here in New York, but in Brent crude prices, in the North Sea crude prices, we are seeing a little bit of a lift perhaps and some support from what we're seeing there. Keep in mind, Brent crude prices are still just a few dollars away from that $100 a barrel mark, and OPEC members are trying to talk down those high prices. The Kuwaiti oil minister saying that there is perhaps a need for additional supply, a coordinated effort to bring those prices down. But as we look at prices at these levels and as we look at the huge disparity between Brent crude and NYMEX crude prices, we're also looking at these demonstrations spreading not just to Egypt, but also to Yemen and also to Mauritania and Algeria. Keep in mind, as we are watching these protests spreading, we're also looking at what the actual oil production is in these countries. That's what traders are focused on. And the fact remains that when you combine the oil production in Egypt, Tunisia, and Yemen, it is still just a tenth of what the daily oil output is in Saudi Arabia. That perhaps is why oil prices have not yet been as affected. Back to you.
Sharon, thank you very much. Here to expand a bit on the unrest and the riots in the Arab world that started, as Sharon mentioned, in Tunisia. Joining us now to talk about that is John Kilduff, partner with Again Capital and a CNBC contributor. Good to see you, John.
Same here.
You're
Thanks.
worried about the domino effect. I mean, Sharon mentioned Yemen, certainly. Yep. Yes, perhaps the oil output by those countries is relatively small, but many of them are right around Saudi Arabia, which, of course, is the king of oil production. You're worried about the domino effect. Tell us what the impact might be.
And specifically Yemen, because it is on Saudi Arabia's southern flank. It is the home to al-Qaeda on the Arabian Peninsula. And that's where attacks on Saudi Arabia, or attempted attacks, I should say, have been launched in the past, particularly on Ras Tanura, which is the world's aorta for oil as it comes out of that region. So that's my biggest concern. But obviously, this is something of a contagion. Libya is also potentially on the list here. A similar situation with a long-term autocrat, a youthful population that's massively underemployed. And Saudi Arabia has similar demographics. The demographics in this region are very troubling. There's a tremendous amount of youth underemployment, unemployment, and we saw protests and massive demonstrations in Iran itself. So it's really all of a sudden become a real tinderbox out that way.
Youth unemployment is estimated at 30% in Egypt right now.
At least.
I've
heard higher numbers.
Why has the market not reacted?
Because I think for right now, because we're not necessarily involving a true oil producer of any kind of grand scale. So I think for right now, it's a wait and see to see if things worsen. Of course, we also have Egypt impacts on Israel potentially, and Lebanon with the Hezbollah factor, and obviously the Muslim Brotherhood will now try to take control of Egypt, which could make things very dicey for Israel down the road. And this all feeds into the political premium that we talk about so much here.
That's the sort of astonishing thing to me here. If the Mubarak is out, he is America's biggest ally in the Arab world as the head of that big country. And if that goes, I just can't imagine that there won't be a major impact on oil and on equity markets globally.
Unless if we get lucky somehow, and somehow Mohammed al-Baradei, who should be a name that's recognizable to folks.
I heard he was going there.
He's on his way. Nobel Peace Prize winner.
He was the arms inspector.
Former head of the International Atomic Energy Agency, was directly involved with Saddam Hussein's monitoring of the nuclear program there. He has some potential to maybe pull this off. But if we get the Muslim Brotherhood, we just had Hezbollah win in Lebanon, Iranian-backed proxy there, and then the Iranians obviously have knocked down the protests within that country. Things aren't. We seem to always be backing the wrong horse here in terms of U.S. and Western interests in these countries. And here we go again. Saudi Arabia also being vulnerable as well.
Not to discount any of this, and the pictures are obviously compelling. Rex Tillerson, by the way, the Exxon CEO, said today that he says he expects oil prices to largely remain where they are. You believe that? You think they're going to largely remain where they are over the next, say, 6 to 12 months?
I do. I haven't been all that bullish as of late here. I thought we'd get to 100 as we turn the corner on the new year, but that was it. And in my predictions for CNBC.com for 2011, I said we could potentially see 50. There's a scenario there for that, for these prices to collapse if the emerging markets don't hold up. And what we're seeing in some of those stock markets in Shanghai and in Brazil, I'm not sure that we're hitting on all cylinders out there in those demand-centric environments.
Okay. Thank you, John, very much. Good to see you again.
Thank you.